The year 2020 has been a rather unique one, with the first half, seeing global equities take a plunge and a drawdown of about 40 to 50% each across the board, only to recover and scale new highs in the second half. So we have, most of the indices ending the year on a high note and reclaiming their previous highs as well. If you have a look at how the global equity regions have performed, let me start off with the MSCI North America Index. That has been the rank outperformer, 17.5% positive return so far this year, followed by MSCI Asia that has surged about 14%, and then you have the MSCI World Index that has also surged about 13% in 2020. There's been one region that has not performed well. That's been the MSCI European Index, that is still languishing in the red with a negative 6% return for the current calendar year. But if you have a look at the individual indices as well, like we have seen this entire year, IT and pharma have been the rank outperformers, while we have many of the COVID hit sectors that have been underperformers for the year. Which also results in the Nasdaq outperforming by a huge margin, more than 40% return in dollar terms on this year basis. The Kospi has been the best performing Asian market, nearly 30% return on that one, followed by the S&P 500, about 15% return. And then you have the Nikkei 225 along with the Nifty from India that has surged about 13% each for this current calendar year. Lastly, you have Shanghai Composite that has also surged about 10%. As far as the European indices and the underperformance is concerned, you have the DAX as well as the CAC and the FTSE that have underperformed. In fact, the DAX has been the only one that has been in positive territory to the tune of about 2.5%. While on the other hand, you have the CAC 40 as well as the FTSE 100 that have declined about 7.5 to 14% each. Then you have some of the other indices like the Dow Jones up about 6% for the year. Hang Seng has been, on a negative run, about 6.5% negative for Hang Seng as well. Moving on, if you track world commodities, how they have performed, all of the commodities except for one have managed to rally, and the one that has not rallied has been oil, that has declined about 20 to 25%, and that is primarily courtesy that one day of trading when oil futures slipped into negative zone as well. But the outperformers have been the iron ore pack that has rallied about 75% for the year, while you have precious metals like silver and gold. Silver in particular has rallied about 45% as compared to gold's rally of about 25%. And then you have your base metals like LME copper, that's given you about positive return of 27%. LME zinc has returned about 24%, and then you have LME nickel, tin as well as aluminium and lead that have also returned positive to the tune of about 20 odd percent. If you track the fund flow, that's the indication where the foreign investors are focusing, and of course India has been at the forefront because Indian equities have received foreign investments in this year to the tune of about $22.5 billion. So that shows the amount of interest that foreign investors have in Indian equities. Some of the countries where we have seen an outflow, South Korea for instance has seen an outflow of about $20 billion. Taiwan has seen an outflow of about $17.5 billion. And then you have Thailand and Malaysia that have also seen an outflow of about $6 to $8 billion. But the real essence of this is to track Indian equities, because foreign investors are set to purchase their largest annual in terms of Indian equity worth of $22 billion, and that's the highest that we have seen since at least 2012.